Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 10th COT report in 2014. And as usual, we're going to start off with the changes in commercials position. So here we go. As you can see, we've got soybean oil on top with a 29% change in commercials positions, 27 in large speculators, and 37% change in small speculators. You can see the changes over here, and on this 1 year's chart, I believe this is definitely the greatest changes, no question to that. You can see commercials moving from roughly 18,000 contracts net short down below 40, or approximately 48,000 contracts net short. All this happening after a nice rally. This is, of course, a bearish type COT change signal. Let's have a look at the 5 years chart and see how extreme this market became. You can see that we had this nice bullish COT extreme signal just before the rally started. And as the rally continues, we're moving away from that extreme and getting closer to bearish extremes. Well, there's still some space left. You can see that commercials can go even below 100,000 contracts net short levels. It's not necessarily the case all the time. You can see that we have some pretty significant relative extremes in the market. So who knows? Maybe this is going to be one of those relative extremes, pushing prices a bit lower. Let's move on and have a look at the NASDAQ, where we have a 25%, as we can see, bullish COT change signal from commercials, and roughly the same change size in large speculators. So here's the change. You can see this happening after a bit of a decline in prices. So this suggests that prices may rise a bit in the next few days, or possibly few weeks, but don't forget about the extreme that is present in these indexes for quite some time now. All along 2013, basically, we were very close to these levels, and we're not far from them from that level at the moment either. So bear in mind that this is a large extreme, possibly putting it into the rally. Of course, question, as always, is the timing issue, when. But let's move on and have a look at the Chicago wheat. We have a 22% change in commercials positions over there, and 19 in large speculators and small speculators. Again, a bearish type COT change signal. Significant, but we do see larger changes in the past. What's interesting to see is I believe that both commercials and large speculators are net long. It's difficult to tell whether commercials are net long or they just became net short. But one thing's for sure, it's basically small speculators who are the only ones pessimistic about the market. Now that in itself, of course, sounds a bit bullish, but let's open a longer chart, this 5 years chart, and see how extreme this market is. You may see that we had this nice bullish COT extreme signal a few months ago, and that really signaled well this bottom over here. As prices are going higher, obviously the extreme goes down. We're not that extreme about in the market currently. To get a really nice bearish COT extreme, I believe we should go down below 40,000 contracts net short in case of commercials, or we may say large speculators would go above 60,000 contracts net long levels. So this in itself can be considered a relative extreme, a relative bearish extreme. You may see an example over here, pushing prices back down. So it's really the question how we look at it. Small speculators are definitely, well, they are net short, but you may see on this chart that they've been in more deeper net short areas before. So comparing to that, they are actually the most optimistic right now. Moving on to large speculators COT Extreme. Here we go. You may see coffee and lumber on top of our list. Let's start with coffee, where we have this 159 report extreme. And of course, this huge rally in prices. Let's open the 5 years chart right away. Here we go. You may see that this is becoming a strong bearish COT extreme. As I've told you earlier, a few reviews ago, that if we open an even greater chart, a longer chart, let's say a 15 years long chart, you may see that there's still some space left for commercials to become even more extreme above the market. That suggests that the rally can continue. Of course, again, it's hard to tell, and it's difficult to pinpoint the exact location of this top that's going to eventually come in coffee. So anybody who has positions on the long side may consider scaling out, or, well, actually, I don't really want to recommend anything. I'm just warning everybody to always take care about the COT data. As you can see on this 15 years long chart, that it's pretty easy to tell where we had these bullish COT extremes. That's an extreme that eventually, after some time, actually we had to wait quite a few months, almost a year, or maybe a year and a half, before this bullish extreme eventually prevailed and pushed prices higher. On the other side, you may see that roughly around 40,000 contracts, exactly where we are at in the moment, is already a level of bearish extreme that has the power to end a rally and push prices down. But let's move on and have a look at lumber, where we have a 115 report extreme in large speculators, opening a 5 years chart. Here we go. You can see that here we have this extreme. It's a bullish extreme. Commercials basically at this, we may say, upper band on this 5 years chart. Large speculators at this lower level over here. Small speculators are not that interested about the market currently. They're not that extreme, but it's definitely a bullish extreme, that even though prices have reached these levels, may be capable of pushing prices even higher from here. And then last but not least, the Minneapolis wheat, where we have this 113 report extreme in large speculators. Moving on to a 5 years chart. Here we go. You can see everything on a wider scale. This extreme, of course, may widen even more. Even on this 5 years chart, you can see some greater extremes in the past. We're here in 2011. Commercials reaching roughly 4,000 contracts net short levels, and they're roughly at 17,000 contracts net short. So there's still some space left, meaning the rally can continue. But it's definitely a market to have your eyes on. May be a good shorting opportunity a few weeks from now. Okay, that's going to be all for this week. If you would like to have a look at other COT charts, you can do so at our COT charts page. If you would like to have a more in-depth and detailed COT analysis, then you can have that here at cotbase.com. You can add other great functions to your table: the long-term trend, the volume and open interest scores, or the COT index. And of course, you can look at all the COT report types that are available at CFTC. Look at the futures and options data types. So a lot of great functions here that you may have a look at. I hope you enjoyed this review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.